Hello everyone, and welcome to this specialist trading presentation of the Elite Emini Trading College. I'm really excited about this presentation today because I'm going to be talking about and introducing our updated version of our college. We've only offered this once before, and this is a great way to learn how to trade the Emini Futures, or actually any type of futures, because these strategies and techniques will be applied to any market that trades futures as well as different time frames. For example, I'm going to be sharing with you as we look at this chart of yesterday. Someone looking at this 15-minute chart from yesterday's action would have said, well, there's not really much action happening here. We're just going in a sideways market. But one of the techniques I will be teaching in the course, as well as sharing two of the rules today, would have generated a buy signal. This would have been yesterday afternoon around 10 o'clock Pacific time. And then we all know what happened after that. There was a really nice rally that generated 12 points after that. So you could have had the potential to take all 12 points if you wanted to, which would have been comparable to $600 per contract. The good news about these rules I'm going to be sharing with you today, as well as all the strategies and techniques in the Emini College, is that they can be transferred over onto different time frames and different futures markets. So this plans to be a really great presentation. Stick around. I'm going to give you a lot of great information. Welcome once again. My name is Steven Primo. I am the president and founder of Specialist Trading. And if you haven't found out by now, we are all about educating you as traders. It's our goal to educate you so that you can put the power back in your hands. I've been trading for nearly 4 decades now. I started trading on the floor of the Pacific Stock Exchange in the 70s. I was on the floor for a total of 16 years, and 9 of those years I was a specialist, so that's where we get the name Specialist Trading. Now, if you're not familiar, have never heard of what a specialist was, because there aren't that many around anymore. In the old days, before electronic trading, if you wanted to buy or sell a particular equity, you had to go to the trader who specialized on the floor, who made markets in those particular issues. So if you wanted to buy or sell IBM or waste management, you went to the trader who specialized in that. And that's what I did for 9 years. I made markets in roughly about 50 stocks. I traded through the crash of 1987 and the bull market that followed. I've traded and seen just about every strategy and every system around. I've been involved in straight up environments, straight down environments, sideways markets. So I know what works in terms of consistency, and I know what doesn't. So about 8 years ago, I teamed up with Pro Trader Strategies, and we put together Specialist Trading, where all I do is teach and mentor our students in over 100 countries around the world and in virtually every state in the United States, all the techniques I've accumulated in my 4 decades of trading. And then basically what we do is just teach them. These are all the same things that I currently use myself in my own personal trading. So we are first and foremost, as you'll see, an educational company. We're different from other websites, or they have the, to tell you they have the secret, system to trade, and all you have to do is just buy and sell whatever we spit out on a nightly basis. We don't believe in that, because if that were true, if that worked for the majority of all traders, then they would all be successful. But it's been estimated that upwards of 80% of all traders fail. So we don't really believe in this style of trading. We feel that the only way you can become consistent is by actually doing the work, putting in the work yourself, and by using sound techniques that have stood the test of time, and then taking charge of your own trading, making your own decisions. Now, the reason why most people don't trade this way, myself included when I first started trading, is because they don't have access to a mentor, someone that will teach you these things that have stood the test of time. So that's my role as your mentor, as your instructor. I teach you all of these things that do have a high level of consistency so that you can make your own decisions and not have to rely on anyone or anything else. All right, now before we begin this presentation, we are required to show you this, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results on these 2 particular rules I'm going to be sharing with you, as well as a lot of slides today, what's offered in the Emini College. But as always, please take a moment to view our disclaimer, because we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Once again, we're required to show you that, so as you are taking a brief moment to view the disclaimer, I would also like to take this moment to invite each and every one of you to follow us on Twitter. You may want to copy down our handle there, abbreviation for Specialist Trading, at SPCLST. TRADG, if you haven't done so already. Every day I post something different. In fact, yesterday or a couple of days ago, I posted a buy signal in one of the strategies actually that will be in the Emini College that generated a buy signal in the Emini S&Ps. And as you saw, the last day or so, we had a really nice rally. So this was part of us, what we post on Twitter, anywhere from signals that are generated to actual bits of wisdom. So feel free to follow us on Twitter for some more information. All right, now I want to start out by sharing with you what I learned trading on the floor of the exchange, because once again, we are an educational company, and this is what I learned because, believe it or not, my first year or two as a trader on the floor, I struggled just the same way anybody else does. Even though I had access to all this information, I knew what the institutions were doing, I had millions of dollars to trade with, I was struggling just as if I had a $2,000 account trading out of my home. I couldn't make ends meet, but I was doing all the things I had been taught. You know, I was taking all the seminars, reading all the books, learning about volume, about Elliott wave, support and resistance, Fibonacci, learning everything that basically that you are supposed to be trading, the right way to trade, overbought, oversold indicators. And you know what? Every once in a while, I would have a really nice winner, but then I would give it all back. I'm sure a lot of you are going through that. So it was very discouraging. And I was lucky enough to see, to have a few mentors that saw that how much I was struggling and how frustrated I was. And so they taught me all the things that I believe have been able to sustain me for nearly 40 years of trading. So here's what I learned trading on the floor of the exchange. Here's what my mentors taught me. They said successful trading should be non-subjective. All right, so what do we mean by this? Well, non-subjective means that you should have some type of rule-based methodology or structure involved in your trading. In other words, you should not wake up and say, well, I feel lucky today, or well, let's see, what does that guy say in the chat room, or what does somebody say on TV? I want to follow what they do, or I'm going to follow some type of method where, even though someone else says it's a sell, I think it's a buy. All right. That's too subjective. We want things that are cut and dry, that everyone looking at the same chart, looking at the same rules will come up with the same objective. Either it's going to be a buy setup or a sell setup, or there's nothing to do. They also said that successful trading should be consistent. Now, what do we mean by that? Because everyone says, well, sure, you want to be consistent. But what we mean by consistent is that we're aware that every once in a while we may have some small minor losses, and that's okay. I always laugh when I see these ads, or I get these requests to come see some seminar that they have a 100% foolproof method that has not lost in 50 years. It makes money all the time. I mean, that's just silly. That's like an athlete never striking out, or an entertainer never having a hit album or hit movie. It's just natural to have these setbacks every once in a while. The beauty is, as long as you can control these setbacks and they're minor, and you're able to make them back right away, that's what consistency is, and that's okay. So it's all right to lose every once in a while, as long as it's controlled, as long as it's minimized, and as long as you have methods that are able to recoup it rather quickly. This is what we mean by being consistent. 2 steps forward, 1 step back, instead of saying like, well, we're going to make millions of dollars off this tremendous trading system. Trust me, I knew tons of traders on the floor who made lots of money in a relatively short time, hundreds of thousands, even millions of dollars in just a very, very short time. And each and every one of those traders lost it or gave it all back. So it doesn't matter how great of a technique you have that makes tons of money, because it can just as easily give it back if it's not consistent. I'm more content with using a methodology that has a 2 steps forward, 1 step back approach that will allow you to be trading 20, 30, 40 years down the road, rather than making tons of money in 1 year and then giving it all back the next. Now, my mentors also taught me that successful trading should be as simple as possible. Now, if you go back and look at traders who've been trading a relatively short time, anywhere from even 5 to 10 years, their techniques and their plans are usually very complicated. A lot of different indicators, looking at a lot of different news or outside sources, a lot of convoluted logic. But most of the traders who've been trading 30, 40, 50 years have very simple trading plans, anywhere from 3 to 5 rules at most, maybe 1 indicator, maybe not even any indicators at all. So that's what you should be focusing on, keeping things as simple as possible. It is the easiest thing in the world to overcomplicate your trading. Anyone can do that. You don't have to be trading 20 years to overcomplicate your trading. You can be trading 20 minutes and add a ton of things onto your trading plan. But it really takes a lot of character to simplify your trading. It's very difficult to do that, but once you finally let go, that's how you get onto that road to consistency, okay? And then lastly, and I think the most important thing my mentors taught me, is that successful trading should make you a part of the process. Okay, this is, I think, the greatest fault of all traders, and myself included, because whenever I say these things, I'm speaking from firsthand experience. I'm not just trying to be arrogant and condescending and telling you what you're doing wrong. I did this exact same things 40 years ago, and they didn't work for me. So I was trading incorrectly myself. I was relying on too many outside sources to tell me what to do. Now, at the time, we didn't have chat rooms or trading rooms, but we had newsletters. We still had news to follow. We still had gurus that we listened to. And that's the same thing as going to a trading room or chat room or listening to someone on TV telling you what to buy or sell on a daily basis. When you do that, you're basically telling the market, I don't know what to do. I don't have enough confidence in my own abilities to trade, so you tell me what I should do, all right? You tell me what I should buy tomorrow or what I should sell tomorrow. You tell me the perfect time frame, all right? You tell me the perfect market, because I'm not that good, so you must have all the answers, right? And most traders love to trade this way, once again, myself included, because it's a great out. It gives you a perfect excuse that when it doesn't work, you can always blame the person you were listening to, or the indicator, or the technique you spent thousands and thousands of dollars on. Oh, it's that fault. This thing doesn't work. Or that guy doesn't know what he's talking about. Boy, is he terrible. I listen to him. Or else the one I hear even to this day, the most popular one is, boy, I was doing everything right and the news came out and it really killed me. Okay? It's always something that ruins your trading. What you have to do is make your own decisions, be a part of the process, take responsibility for everything you do. And that way, if you lose, you're taking responsibility for it, but you have a trading plan that's able to recoup it. And then once you do make money, you take full responsibility. You don't have to tout somebody's website or some system that you don't know what it's based off. You made your own decisions. You're in charge of your own destiny. It's all these things that I credit for sustaining me for nearly 4 decades of trading, and these are the same concepts I teach to all of my students, and these are a great part of the college, which I will be sharing with you all these different concepts. So as you can see, we are an educational company. We're not like all the other companies where we say, I have the perfect system. All you got to do is buy or sell this. I'm trying to teach you these things so that you can just be in charge of your own destiny and basically stay with us for however long you like. But ultimately, most of our students stay for a while and then they're consistent. In fact, I just got a testimonial today where someone said they had gone years without making any money at all. They had spent thousands and tens of thousands of dollars on all these techniques and all these systems. And after just taking a few of my courses, they were finally consistent for the very first time. And then you're free to be on your own. You don't have to keep paying for services. You don't have to look at the perfect indicator. You don't have to go to a blog every night. All you have to do is make your own decisions. So this is the concept, the philosophy behind specialist trading. This is the same edge that was taught to me. This is the same edge that I want to teach to you and all my students in our Emini College. Okay, with that said, we're going to start off by sharing with you what's going to be included in the college once again. Plus, I'm going to share with you those 2 rules that are part of one of our most consistent strategies. But before we begin, since I am going to be your instructor, we'll conduct this as if it's a classroom. And if you have any questions, kindly wait till the very end of the presentation, just in about a half hour or so, okay? I promise I'll get to each and every one of them. But if, if we happen to stop every 5 seconds for a question, we'll really slow down the base of all this, of what I'm trying to teach you. So oftentimes, if you wait for the second slide to appear, your question has been answered. So just kindly wait till the very end to ask any questions if you happen to come in late right now. Also, I will just answer this one question, and that is the most popular. That's, is this being recorded? Yes, it is. So if you're having technical difficulties or if you have to leave early, don't worry. This is being recorded. You can go to Pro Trader Strategies and they will send you a link. Okay? So once again, if you have a question, write it down or try to remember it, and I promise I will get to it at the very end. So let's begin. Here is the curriculum that's going to be in the Emini College. It is 6 weeks of intensive training, but it's going to be done live in a webinar such as this over the internet where you can personally ask me questions, and we have this more of a teacher-student interaction as opposed to me speaking to hundreds of people as I'm doing right now all over the world. Now, week 1, we're going to talk about the foundation and building blocks of E-mini trading. All right, this goes over our concepts and philosophies. I touched on them just a little bit a few seconds ago. Week 2 to 4 is where we get into the meat and potatoes of all the college. It's what everyone wants. We get into the strategies, all right? Now, week 2, we will cover the first strategy, which is strategy number 1, and that is our premier pullback strategy. It's a great strategy. It's indicator-based. It only uses one indicator, but that indicator helps us decide where we're entering, helps us decide where we're going to place our stop and our exit. But it's extremely simple. So it's a pullback strategy. Strategy number 1. Now in the next week, week 3, we go over the next strategy, which is strategy number 4. And these are the 2 rules I'm going to be sharing with you today. Strategy number 4 is probably our most popular as well as consistent strategy to date. It can be transferred so easily onto any market and time frame, and I'm going to show you lots of examples today. And it's extremely simple, but it's now a pattern recognition strategy. It doesn't rely on any indicators. It's simply a pattern that we have to learn how to identify. Okay? In the next week, week 4, we go over our premier E-mini strategy, which mainly focuses on daily bars. It was designed just to use for daily trading to get those nice big moves in the E-mini. You can get about 2 to 3 setups a month using this, okay? But since our very first college, a lot of our students say that it works fine intraday. So, hey, this is what we want to do. We want you, and we encourage all of our students to experiment, to research and see how they can apply all these techniques. But it's basically built for a daily bar type of setup, and I'll show you a couple of examples of trades that happened just the past week, all right? Week 5, we go into probably one of our most popular as well as powerful tools at specialist trading. That's the PET-D. You've heard me give webinars about this before. It's the Primo Early Trend Detector. It's a formula I learned on the floor some 40 years ago of the exchange, and we've made it into a Colorbar algorithm, and we show you in the college exactly how to apply it. It's a great, great tool. You can use it short term, and one of the best secrets about it is that you can also use it for long term. I'll share with you a slide of that as well. In the last live week of our presentations, week 6, we put it all together. We take any questions that you may have, and we also give you something that is only used in our colleges. It's the advanced trade management, another technique I was taught some years ago on the floor. This is a great, great tool that I use with all of my strategies that I trade, and we share with it, like I said, it's not anywhere else. We don't have any courses, individual courses on this. We don't have individual classes. This is only offered in the colleges, stocks, E-mini, and Forex colleges. And it's a great, great tool that tells you when you should be trading your particular strategy and when you shouldn't. Okay, so we give you that in week 6, and then we put it all together, any questions that you may have. Now, these are all live classes. They're very intimate. In other words, we have a group where we can talk and exchange ideas and ask questions. You don't have to worry about asking anything. One of the things also involved with the college is that we have homework assignments. I am your educator. I am your instructor. I will be giving you homework just to make sure that you understand this, because this is different from other courses you may have taken. Remember, we're not just force feeding you signals and telling you, well, whenever you see a green arrow, buy, whenever you see a red arrow, sell. We want you to fully understand the process behind all these strategies, behind all these concepts, behind all these tools, because you're ultimately going to be on your own. You'll always be able to converse with me and correspond with me, but you're ultimately going to be trading on your own, and that's what we're pushing for. So you have to fully understand it. The only way I can know if you are in line with the process is by giving you homework assignments. So this is also included as well. Now let's talk about some of the tools and techniques we will be covering in the first week, all right? We're going to go over a great edge that I use in all of my trading. It's extremely simple but powerful. Now this is a simple tool designed to place you on the right side of the market in any time frame and in any direction. The beauty of this tool is that you can really use it for any trading. Doesn't matter if you're trading currency pairs, doesn't matter if you're investing, all right? But so many times you'll see situations like this. Here's a 5-minute chart of E-mini, but remember, this can be applied to a daily bar, a weekly or monthly bar. All right, let's say that you're watching this, and as you would normally, you'd say, well, look how high this has gone. This has really taken off. The chat room I went to this morning says that that's where the resistance is. This is where all of the Fibonacci levels are. And this is where the institutions are coming in to sell, all the big money. And so, all of my indicators are overbought. So I'm going to sell here. It looks like we're rolling over. We're probably going to, the other class I go to, the other course says we fill gaps. So we're probably going to go all the way down and fill that gap. So I have a ton of reasons that are valid to go short with all the classes and courses I've taken. So I'm going to sell, right? And this is what usually happens, right? So look familiar to anybody, all right? With this tool I'm going to be sharing with you, you would have never gotten short, and in fact, you would have been looking for buy setups. So that's one of the edges we're going to be sharing with you. We're also going to give you another edge that is a simple technique designed to fine-tune your entries, resulting in high percentage trades. Now, one of the common questions I get from new students is that, Steve, it's not that I've been a bad trader. Most of my ideas are correct. It's just that my entries are faulty. I'll get in too soon, or I get in too late, and then I miss a big move, or I'm afraid to get in because it's too late. Well, let's look at this example right here. Here's another 5-minute chart of the E-mini. Let's say that your technique or your strategy or what you really strongly believe is that there's, this is a selling opportunity somewhere around here. All right, okay, so let's say it is valid. That is the area where you want to sell the E-mini. And so you want to be conservative. So you say, well, when we break this little double bottom here, that's when I'm going to go short. That's where the support is. The blog I go to says there's support right there. So I'm going to sell when we break there. So we trade below. So you go short. And then this is what happens, okay? Well, it's not necessarily true that this is a bad trade, that you shouldn't be shorting, because we're still in the shorting area, the vicinity of which you wanted to sell the E-mini. It could be that your entry is faulty. Now, with this technique, you would not have entered where you wanted to, but actually, if you had had a signal, you would have entered here. And then you would have seen that you were correct to be going short. It's just that your entry technique was faulty. This is what we share with you. Remember, you can apply these techniques and concepts to any strategy you currently have. And we really strongly feel that they will increase your odds for success even more. So we're not just giving you strategies and telling you you have to trade the stuff we're giving you. You can apply these concepts to what you're currently using as well. And if your strategy has been working so-so, we really think we'll ramp it up into the next level. Now, we also talk about exits. Once again, these are different concepts you can apply to any technique you're currently using. We give you a variety of both aggressive as well as conservative exits. Here's another example in the E-mini. Now, here's an actual buy signal that was generated by one of our strategies. If you want to, you can opt out to exit right here at the first initial exit point, at the next one, or even at the more aggressive one here at exit number 3. Remember, our whole philosophy is to put the power back in your hands, is to give you all the different options and variables so that you can decide how you want to trade. Not by having someone say, you buy here, you sell here, and you get out here if you're wrong. That's taking you out of the game. You've automatically taken yourself out of the process. We want to put you in the game. So we give you all these variables, I instruct and mentor you, and then we decide which one you feel the most comfortable with. A lot of our students like to trade in and out rather quickly, so they'll apply exit number 1 for this particular strategy. Others will try and get as much bang for the buck, and they'll say, no, I'm going to exit at placement number 3. Whereas you can, if you trade with multiple positions, you can exit at each place. It's up to you. There are 1,000,001 ways to use all the different variables we present in the college. We also give you 4 initial stop placements. Once again, you decide where you want to place your stop if you're an aggressive or a conservative trader. And then if you want to track the trade, we give you 3 moving stop placements. Different ways to track if you sell a half portion of your position and then want to track the remaining portion. We give you 3 different moving stop techniques and placements. Now let's get into the meat and potatoes of the college. This is what everyone's concerned about. This is what everyone wants to know. The strategies, okay? As I explained earlier, we give you 3 of our proprietary strategies. These are really great tools and techniques. Now today we're going to be talking about strategy number 4. If you've gone to my presentations before, you've seen how I talk so much about 4 because it's a great consistent strategy, simple pattern recognition method, and I use it every day in some capacity in my own personal trading. So who is strategy 4 for? Well, it's for traders looking to catch quick momentum moves. When I first learned this strategy some years ago on the trading floor, we used it to get in and out of trades in about 3 to 5 minutes because that's the way we traded on the floor. But as we experimented more and more with it, I share with you techniques of how you can actually use this strategy to be in a trade as long as you'd like, and that can last anywhere from days, weeks, or even months. Okay, so don't feel that this is only for day traders. It's for all students, from beginners to advanced. We have hedge fund traders using strategy 4. We have people that have never traded before using strategy number 4. Everyone gets the same basic format when they become a student of mine. All right, no one gets an advanced way to trade since you've been trading for 10 years already, and no one gets a beginner's guide if you just started trading. Everyone gets the same format. It's after you understand the format and understand the basic premise that we start to mentor you. And then I start to find out what you're looking for. Are you looking for those large gains? Are you looking to get in and out quickly? Are you a day trader? Are you a position trader? And then we work on how to apply strategy 4 that meets your needs. It's a pattern recognition strategy, so we're looking for a specific pattern to trade, all right? I'm going to share with you 2 of the 5 rules of this particular strategy. It's a very easy strategy to trade. If its intensity level, if 1 were the most intense of all strategies where you could not leave your computer, and 3 was the easiest of all strategies where you could simply enter an order and leave, it's a number 2, very moderate strategy, goes right down the middle, all right? You can apply this to any time frame and any direction. So it doesn't matter if you are trading tick charts, it doesn't matter if you're trading monthly bars. Strategy 4 can be applied to all of them, okay? Now, for educational purposes, once you become a member of the college, we supply you with the add-on that goes on to your charting software that will generate up and down arrows or signal generator points so that you can know what to look for. But they're not meant as a crutch, okay? So please, when you see this on the charts I'll be sharing with you, these are meant for educational purposes so that you know what to look for or you can check your work. They're not meant for you to say, well, I really don't need to understand the rules because a red arrow appears when I'm supposed to sell and a green one I'm supposed to buy. All right, that's what we want to go away from because that's a crutch and you've taken yourself out of the game again. But in order to know that you've properly seen that a strategy 4 buy signal has been generated, we supply you with these in the beginning, okay? Remember, our edge here is consistency. I never tell anyone that every trade's a winner. I don't believe in that. That just happens. In fact, this morning, my very first trade was a small loss, and then the second trade I made it back and a little bit more. That's just the way consistency works. You just have to get to that point. So our edge here is consistency. 2 steps forward, 1 step back. From time to time, you will have some small-minded losses. All right, but the beauty of our methodologies is that they are most likely able to recoup those losses very quickly. All right, so let's share with you 2 of the main rules of strategy number 4. All right, now remember, once again, if you have any questions, you don't really understand it, please wait till the very end to ask questions. Also, this is being recorded, so you'll be able to watch this as often as you like if it doesn't make perfect sense right now, but they're very simple. All right, rule number 1. We are going to look for bars that close either in the top or bottom 25% of their range. All right, so what does that mean? Well, let's look at a generic bar here, okay? Doesn't matter if this were a tick bar, a 5-minute bar, or a monthly bar. But what you want to do is when you are looking for a setup, a proper setup that make up the requirements for this particular strategy, you want to divide the bar by 4 separate but equal parts. And if you close in that top 25%, the way we did here, in fact, we actually closed at the very top of the bar, well, that is an indication to buy. That's what we're looking for. Why is that an indication? Because it's the market telling you, not some guy in a chat room or some guy on TV, but the market telling you that most likely it wants to continue in that direction. By the very fact that it closed in the top 25% of its range, it's giving you a great clue that it wants to go higher. So why would we use that as a sell? We're looking at that as a buy indication, okay? Now here's where most of my students have trouble. They go, well, Steve, I don't trade with standard open, high, low, close bars. I use candlesticks. Well, nothing changes because we use candlesticks. We're still looking, we're measuring the very top of the wick, which is right here, to the very bottom, okay? So that's the range. The range is not from open to close. It's not the body. The range is always from the very top to the very bottom. So you measure that, and if you close in the top 25%, as we did right here, that's an indication to buy. Okay, there's no difference what type of bar you use. Now, as you can see here on this generic chart, someone looking at this would say, well, okay, so how do I apply this? Well, these 3 bars here, colored green, all closed in the top 25% of their range. So they're all signaling that they want to go higher. But this is just one requirement. You can't build a strategy based off this. It's just one piece of the puzzle. Now someone says, well, what if you want to go short? Well, let's look at this generic chart that closed, or generic bar that closed on the bottom. All right. Once again, it does not matter if this is a 1-minute bar or an hourly bar. It makes no difference. All that matters is that if you can divide the bar by 4, and remember, this is not something that you're going to have to actually, do and calculate. It's so easy to see. You'll be able to see this where the bottom and top 25% of the range are. And then if you close in that bottom, as we did here, we close at the very bottom, well, that's the market telling you, not some supposed guru or some guy, that has some master system, but it's the market telling you that that's an indication to sell. One of the basic concepts of our colleges and everything we do at Specialist Trading is that take your cue from the market, not from an outside source. That's how you overcomplicate things. And once you start listening to outside sources the way I did on the floor, which is really no different from trading in your home. In fact, it's more difficult. You have more things going against you because you have access to all this information, and all it is really more ways to complicate your trading, to overcomplicate it. So it's actually more difficult to be successful on the floor, much easier to be successful out of your own trading office. But the usual way of looking at things is to take your signal from some guy or some indicator. Take your cues from the market. If a bar closes in the bottom 25%, the market is telling you, it's screaming that most likely it wants to go lower. Once again, if you trade candlesticks, it's absolutely no different. We just take the extreme high of the wick to the extreme low. And if you close in that bottom 25%, it's the exact same thing. It's an indication coming from the source, coming from the market you're trading, that it wants to go lower. So if we look at this generic chart right here, this bar closed in its bottom 25%, okay? All right, now we apply the second rule. If all the qualifications are met in strategy number 4, and we just gave you one of those, we're going to enter upon the confirmation of trend. All right, so what does that mean, the confirmation of trend? Well, here's our confirmation method. If we get a buy signal, meaning that all the rules are met and we have a bar that closed in the top 25% of its range, we're not going to simply buy at the market, or we're not going to place a bid to buy lower. What we're going to do is buy if price trades 1 to 3 ticks above the bar that closed in the top quarter of its range, the bar we just explained to you, okay? So we can't just buy at the market. Now, once again, that's a more aggressive way to trade. We're not going to tell anybody how you can and cannot, but we're giving you the basic foundation. As you get more experience, you're welcome to enter any way you like. But this is the basic foundation of strategy 4. We want to wait for confirmation, because how many times have you got a perfect buy signal with every method you're trading, based off news, based off an indicator, or based off the full moon? It doesn't matter. But you get a buy signal, you buy, and the minute you buy, it goes lower. Okay? I'm sure that sounds familiar to a ton of people. That's common. What we want to do is wait for confirmation. You'll have a better way to enter the trade if you wait for it to trade 1 or 2 ticks above. So as we look here, here's this chart where all 3 bars happen to close in the top 25% of their range. Now what we want to do, since we're trading a momentum-based strategy, we want to trade above these bars on the next bar, because that means that momentum is continuing. So as we see here in this very first example, well, that's where we want to buy. We have a perfect setup. It met all the rules, but did we trade above there on the next bar? No, we didn't. So there was really no setup. If we go to the second example, well, yes, we did trade above there on the next bar. You notice I didn't say we closed there. All we have to do is just trade intra-bar. So as you can see, you would have entered and you had a nice, 4 bars up, okay? Not a great move, but at least there was nothing there you would have lost. And with our proper money management, you might have made a little bit or maybe broken even. But as we see in our last example here, we had another bar that closed, met all the requirements of the particular strategy, and you would have entered on the next bar again. Once again, as you can see, it closed lower, but that's okay. You're already in the trade, and this one had some really nice move to the upside. See, this is not based on any news, not based on any volume, not based off support and resistance, all the things we've been taught. It's only based on what the market is telling us. How about if we're going short? Well, the confirmation method is just turned upside down. If we get a bar that closes in its bottom 25% of its range, we're only going to sell if price trades 1 to 3 ticks below that bar. Okay, we want to confirm that it's going in the same direction. So as we see here, this bar closed in the bottom 25% and met the rules of the particular strategy. So we're going to sell if we trade 1 to 3 ticks below. Doesn't have to close there, just have to trade there. And on the very next bar, it does. As you see, it closed higher. That's okay. We entered to go short, and look what happens. This is the way trading should be, consistent and by listening to the market. All right, so let's give you some more strategy number 4 examples. I'm going to show you actual trades that happen. We're going to start with different time frames and go down to a smaller time frame. And you're going to see in motion all these rules that we just shared with you as applied to strategy number 4. Let's look at what happened here on a sell signal. This is a daily bar using strategy number 4. Okay, this is an actual strategy number 4 sell signal. We close in the bottom 25%, and we're going to sell 1 to 3 ticks, but only if we trade there on the next bar. Well, we traded there on the next bar. We opened a little bit lower, but look what happened to the market. All right, this was a daily bar coming into November. Let's go down to a 60-minute time frame. As you can see, this is starting at about the 28th of October, coming into the 6th or 7th of November. As we're going lower, look at all these sell signals that were generated using strategy 4. Each and every one of these bars closed in the bottom 25% of their range, and they traded just below it on the next bar. Okay, you could have gone short either all of them or any one of them. You could have used any one of our different exit plans to get out. You could have used any one of our different stop placements. And we also teach you the money management in the courses as well. These are actual signals that happened just this past couple of weeks. Okay. Now, as the market rallied coming into this past week, look at all the buy signals that were generated. See, that's the beauty of this. While the market's going up, we're not doing the same thing that so many other methods do, where we try to fight it. We're trying to pick a top and we're trying to pick a bottom. We go with the trend. So when we notice that the overall trend has changed, what do? We change with it because we're listening to the market. We're not listening to some guy that says, well, all of the institutions and the big money houses I know are shorting the market. We don't care about these outside sources because there's no consistency in them. We care about what the market is telling us. And if the market is telling us it wants to go higher, then guess what? We want to go with it. So as it changed its overall trend, we became buyers. And look at all the buy signals that were generated coming into actually yesterday. Now that's a 60-minute chart. Let's go down even more. Let's go down to a 15-minute chart. This was yesterday, all right? Now yesterday's action on a 15-minute time frame, for the first 2 or 3 hours of the day, nothing really happened. We went up a little, then we kind of went sideways. Everyone was thinking we were going to fall out of bed. But what do we have here? We have a bar that closes in the top 25% of its range, okay? And it met all the other remaining rules of the strategy, the 3 other rules. The last rule is, well, we're not going to simply buy at the market because we know that we could buy and it could go straight down. What we're going to do is wait for it to trade 1 to 3 ticks above. It's our choice on the next bar only. And had you done that, well, you had a nice trade. And as we said earlier, about 12 points in the next couple of hours. Let's go down even more to a different time frame. Let's go down to a 1,000 tick chart. Okay, a lot of our traders like to trade tick charts. The exact same rules, the exact same strategy. Nothing changes because we change time frames. Everything is the same. All of these sell signals are all bars that close in the bottom 25% of their range. They meet all the other requirements and they all traded below on the next bar. So this is what we're going to be teaching you. I think for the very first time you'll see that, wow, so I don't have to, go to a chat room every day to find out what to do. No, you can put the power back in your hands. You don't have to listen to the news to find out if the market's going to go higher or lower. The market tells you all this stuff. Why would you have to listen to anything and try to figure out what it is? Remember, the first rule is not to be trading subjectively. All right? How many times have you seen a news event come out and you think it's terrible news and the market goes straight up, right? Or if you think it's great news and the market goes straight down. It's too subjective. We want things that are cut and dry, and these are all in the Emini College. Now, As I stated, these strategies work great on the E-mini S&P, but the beauty of all the things we're going to be presenting in the college is that they can also be applied to other futures, to stocks, ETFs, even the Forex markets. In fact, let me show you some of the signals that were generated this past month using the exact same things I will be teaching you in the college. As we look at this stock NBL, we see that we had buy signals generated here all the way up. Here's one that was just generated this past week, okay? And you can also get short signals. In Under Armour, we see we've been going short this stock ever since September, even before some news came out. It's not like anyone called us up in October and said, hey, Steve, tell all your members to go short UA because there's going to be a big gap to the downside. And you guys seem like a nice company, and we'd like to help out all your students. No one has to tell us, what side of the market to be on. We take all of our cues from the market itself. So, many times people will say, well, Steve, doesn't the news get in the way of your strategies? Well, obviously there was some news here. The market oftentimes, not guaranteed, but oftentimes give you setups in advance of the news, and you're on the right side many times. Because the reason why you fail many times when a news event comes out is because you're on the wrong side. You're listening to outside sources tell you what to do, and that's faulty. But if you listen to the market, many times it's in sync with what the news event is going to be coming out. Here's crude oil. This is crude oil. Now at the end of September, we had a really nice buy signal, and we all see what happened in crude oil coming into November. And then lastly, we can look at a weekly chart of the euro yen. If you like to trade currency pairs, the same rules apply. There's nothing you have to change. You just transfer over onto the different market. We see here, these are all the same signals of our strategies, okay? So a lot of our students like to trade multiple markets. Guess what? You don't have to buy an entirely different plan or college just to trade the currency pairs. You can use the same things we're going to be teaching you. Now, we're not just stopping there. We're also throwing in 2 extra bonuses, and these are really, really powerful tools that we really feel strongly about and that I currently use in virtually every method I trade. They are the ATM and the PET-D. All right, so let's describe exactly what these are. The ATM stands for Advanced Trade Management. These are 2 techniques that I learned on the floor some 40 years ago. All right, Advanced Trade Management is something I use regardless of what method, regardless of what market, regardless of what time frame. It's a great, great tool for telling me when to trade and when not to trade. And that is what really keeps me out of trouble with these large drawdowns that may occur. For example, we all know when a market is trading perfectly. We get these setups and these signals and everything works. As you see here, these were actual signals of one of our methods, and everyone was a winner. It doesn't matter what you do, it all works every time. And then here's the exact same strategy and the exact same setups and signals and a different time, and this time it didn't work, all right? This was months later. So what's the beauty about ATM is that it will many times keep you out of these markets where your strategy is not performing well. It's Advanced Trade Management. Once again, I apply it to everything I trade. Now, something else I apply to everything I trade is the PET-D, which stands for the Primo Early Trend Detector. Now, even though I didn't create this, it was a formula that I originally learned on the floor of the exchange. It was something you had to calculate, and because we didn't have high-speed computers or programmers, some 40 years ago, we had to calculate this by hand, and you couldn't apply it for intraday trading or different markets because by the time, let's say you're using a 5 or 10-minute bar chart, by the time you finish the calculation, well, another bar chart appeared. So there's no way to calculate it, okay? But what we've done is we've made it a proprietary Colorbar algorithm. So there's nothing you have to do other than apply the add-on, which makes the color of your bars either green or red. If the bars are green, it simply means that you're in an uptrend because this is a trend detector. If the bars are red, well, you're in a downtrend. Now here's the beauty of this. We can use this a number of ways. Now, even though we keep the formula in-house, it's a proprietary method, the basis for this is not so much what the formula is based off of. It's based off momentum, but not the actual formula. The power in this is in using it correctly, because I could give you the formula. You could learn how to calculate it. It would be kind of cumbersome. It'd take you a while to figure it out, but you could do it. But if you didn't know how to apply it correctly, it wouldn't matter. It's just like I can give you the formula for creating, Coca-Cola, all right? If you didn't know how to actually put it together or make it, I mean, it wouldn't taste the same as a Coca-Cola. So that's the beauty in it, knowing how to actually apply it, okay? And that's what I teach you in this course. Now, here's a little known secret that people don't know. Even though we use this for intraday trading and for daily bars, you can also apply it for long term, because the beauty is that it tells you which direction you should be trading. So that means once you know the trend, you can apply any strategy to that direction, okay? Now, here is what I mean by long term. Here is a monthly chart of the S&P index, okay, what we base the E-mini off of, all right? But this is a monthly chart going back some 22 years. You see all the ups and downs of this. This is what's been basically what the market has been based on, or what's happening in the market. 22 years. Each and every one of these bars is a monthly time period. Now, as the market went up from 1994 all the way up to 2000, we had a great run up, and then we were met with the dot-com crash here in 2000. And then we had a topping of the market, and we had a great crash that happened after that. Then the market stabilized in 2003 and went all the way back up again to match these old highs until we had the banking crisis in 2008. And as you can see, we had even a stronger, more powerful movement to the downside, okay? Now, in 2010, we firmed up, and we've been going up ever since. But a lot of traders, a lot of investors are worried, well, because of maybe the election or the new administration, are we in some way entering some type of a topping formation here, okay? Everyone likes to make these justifications based off of, well, the dot-com crash, well, it was the banking crisis, oh, who's in the administration, who's in office. There's always going to be outside sources of what they think is a top or a bottom of a market. Remember, our only job is one thing, to listen to the market and then to jump on board. So how could the PET D have helped us going back some 22 years? Well, once we apply the PET D, we see that as the markets were going up, the majority of bars were green, and as the markets were going down, the majority of bars were red. So it's very simple to know what side to be on. But every once in a while, you'll have a splash of a couple of reds and then followed by green and a couple more. So how do we apply the PET D? Well, for trading long term, the basic rule is if you see three bars of a consecutive color, that tells you the trend. But it must be 3 bars. All right, so all the way up we had consecutive green bars. And now we had a very strong downward move, and the bar was colored red. But then it was followed by 2 green bars. Remember, we needed 3 red bars to tell us that the trend had changed. So therefore, if you're a long-term investor, you were still in the market the entire time until you were met with 3 red bars right here in 2000. Early 2000, you would have missed the majority of this crash by getting out of the market, simply by using the PET D. Not trying to figure out what the economy is doing, not looking at news, not looking at stocks undervalued, simply saying the PET D is red, 3 bars, monthly bars, I'm out of the market until we get 3 green bars, which happened in early 2003. So in 2003, time to get back in, and we remained green the entire way until 2007, where 3 more red bars hit, and that was our signal to get out well before the bottom fell out going for the next year or two. Now in 2009, we had 3 more green bars, and so that was signaling time to get back in terms of investing long term in the market. All right, so as we are still long, we had a couple of downward moves here, a couple of red bars, but remember, we need a total of 3 to tell us that the trend has changed. So we've the entire time gone up, we've still had a couple of red bars, but they always recoup themselves and go higher. So this is a current chart, so we are in no way nearing any type of top until we get 3 red bars. Wouldn't you like to know when those 3 red bars are going to occur? Maybe next year, maybe 10 years from now, maybe next month, who knows? But we need to have the PET D in order to determine that. That is included in the college. So not only will we be telling you how to apply it to 5-minute bars and daily bars, you can also apply it to your long-term investments as well. So let's review what's offered in the college again. Remember, 6 weeks of live training, okay? From the foundation and building blocks to the 3 strategies to the PET D to advanced trade management. Now, we also are including 1 year of signal alerts. Remember, once again, these are for educational purposes only. We just want you to know what to look for. It's a way of telling you and showing you that you are in sync, that you are correctly identifying setups. Here's a perfect example that happened just this last month, about 2 or 3 weeks ago. On the 24th of October, we emailed out to all of our strategy number 1 course members that a new signal was generated. In fact, it was a sell signal on the markets, okay? So as you can see here, this was the 24th. This is strategy number 1, different from the strategy I explained to you today, an entirely different strategy based on different rules. And here's the day the signal was generated, and look what happened to the market coming into the first week of November, okay? Now, I want to share with you something that happened just last week or so. This was on election day, the 8th. Strategy number 7, which is our E-mini, proprietary E-mini strategy that's designed for daily bars, generated a sell signal again, all right? This was to go short the E-mini S&P. Now, if we look at the chart, here is the 8th, election day. Now, we all know that the markets have been going higher. In fact, on the very next day, the 9th, the market closed here at a higher level. But in the course, I share with you how you could have actually made money on this trade. In fact, you would have had the potential to make nearly 90 points in one day. That's $4,500 per contract if you've decided to take this. So that's shared with you in the actual E-mini College. We'll share with you all the rules, how to trade it. Now we have tons of testimonials, all right? I'm not going to read and go over each and every one of them. We have hundreds of testimonials, as I stated, from traders who have never traded before, who have made money for the very first time. You can go to my website, Specialist Trading, or you can go to Pro Trader Strategies, where they have even more testimonials. But do a Google search on us, find out what traders are saying. You'll see that they're very satisfied with our educational teaching of all of our methods. So let's recap before we go into question and answers. Here's what you're going to receive once you become a member of my E-mini Trading College. 6 full weeks of trading tools, techniques, along with 3 proprietary E-mini strategies. We're going to teach you the exact stop placements, exits, and profit targets, all right? But remember, we also give you different variables so that you can decide for yourself. You want to trade conservatively or aggressively, all right? We also provide you with an educational signal service for educational purposes only. As a bonus, we're throwing in 2 of the most powerful techniques we have. That's the ATM, Advanced Trade Management, as well as the PET-D, which we just went over. I think the most important thing about this is that we're not just sending you DVDs. You're getting 39 years of trading experience, someone who uses these techniques on a daily basis to be your personal mentor. All right? This is not someone who's been trading for 5 years who says, I found the perfect system and this is all you have to do. This is someone who's been actually trading for 39 years, started trading on the floor. I've gone through the ups and downs of trading, so I know what you're going through. I can shorten your learning curve if you're having a difficult time. As my mentors taught me, remember, trading should be non-subjective. 2 traders should look at the same chart and come up with the same objective, okay? It should be consistent. That simply means that we know we will have small losses from time to time, but we feel confident in the strategies because we know we will recoup them rather shortly. It should be as simple as possible. Look at your own trading plan right now. Is it filled with tons of convoluted logic, tons of indicators, different news sources you have to look at, all right? But I think the most important thing is that successful trading should make you a part of the process. You have to make your own decisions, okay? You should no longer be relying on an outside source telling you what and how to trade. And that's my goal in the college and as your educator at Specialist Trading. My goal is to teach you how to trade with the same edge that changed my trading around. This is the specialist edge. So here's what you're going to get. Once again, all this and instant access, all right? So you don't have to worry and wait. You get instant access to this. We will be sharing with you a lot of the concepts and detailed information so that you can be ready for the classes, the live classes that are about to begin. Now, if you took all this information I'm going to be providing for you, it'd usually run close to $10,000. We are discounting the price down to $49.95, but we're not stopping there. We're going to discount it even more. For all the attendees today, we're dropping that price down to $44.95, plus we are offering payment plans. 6 weeks of detailed instructions, 39 years of mentoring correspondence for you, all of this included, and we're going to offer payment plans. So this is a great, great deal. If you really want to take your trading to the next level in 2017, this is where you want to start off, okay? So here's how to take advantage of all of this. Contact Pro Trader Strategies. You can email them. I would suggest the best thing to do is probably to call them up for that payment plan, because for a small deposit, you can be up and running and get instant access. So call them at 310-598-6677. Now, if you're ready to start, ready to get instant access, all you have to do is click on the link. Now, that link below is not live. You have to copy and paste that. But if you look in the chat box on the far right-hand corner of your GoToWebinar column there, you'll see that they've posted a live link in the chat box. So all you have to do is click that on. It will automatically take you to the sign-up page, okay? But if you want to get a payment plan, if you want to get a small deposit in there and then be able to make monthly payments, contact Pro Trader Strategies, 310-598-6677. Now, I'm going to leave all this information up there for you, so if you want to contact them, you can have it right there in front of you. I'm also going to start taking questions and answers. So I want to thank you for holding off on any questions. Let's see, I opened up the box and it says, hi, Steve. It's from Scott. It says, but we are not on the trading floor. That's a very different environment. Yes, Scott, I agree. But you know what? That different trading environment was actually more negative. It was more conducive to being inconsistent, as I said earlier, rather than being in your own home office or trading out of your home or on your lunch break. It's actually, it was more difficult trading on the floor because you were bombarded with all these outside sources. You were constantly hearing what all the money houses, the institutions were doing. There's constant barrage of news coming out. There was constant people asking, what are the earnings of this particular stock? There was so much information coming that was so detrimental for you becoming a consistent trader that you're actually at an advantage of not being on the floor. And that's why I struggled. I struggled tremendously, and finally I was able to get in contact with my mentors, and they said, Steve, it takes discipline, but you have to ignore all of that. Don't worry about news. Don't worry about, earnings. Don't worry about, indicators. Just keep it simple by the things we're going to teach you, and you'll get on that road to consistency. So I would venture to say that you're at an advantage for not being on the floor. A lot more, pressure and a lot more things to make you inconsistent on the floor, okay? Some of the people are saying the audio was cutting in and out. So if you had difficulty, contact Pro Trader Strategies and they can send you a link to this recording, because I don't think anyone else has been complaining. It could have been just your internet connection, okay? Now, here's one thing that I constantly hear from traders who, have started trading. Everyone, myself included when I first started, you start out the beginning of the year making all these hopes and promises to yourself how you want the year to end up and where you want to be in terms of trading. So everyone has all these goals and hopes and dreams that, well, at the end of the year, I want to make that extra income so I can go on that dream vacation next year. Or they say, I want to make that extra money. I'll be able to build that addition onto my house or get that, that big widescreen TV I've been wanting so badly, that home theater I want, okay? Everyone has these hopes and dreams, and I can venture to say that 99.9% of all traders never meet them. Very few traders meet them, okay? If you want to be on that road to consistency for the very first time, I urge you to become a member of the Emini College if you're an Emini trader. Because these methods, as you'll see on our testimonial page, have been proven to traders who have had difficult times, who have never even traded before, to get on that road to consistency. They're able to finish out the year and say, boy, I'm somewhere where I never thought I would be. You're getting all these things that have stood the test of time, as well as 39 years of experience as your mentor. Not someone who's been trading for a short time who's going to teach you. This is someone who's been using this for nearly 4 decades. So I'm there with you every step of the way. If you've been struggling, I know what you're going through. I was there, okay? I know how hard it is, but guess what? You won't have to wait, years to turn things around. I will really do my best to shorten your learning curve, okay? Someone is asking, on that UA chart, there was a buy signal after a sell signal with another sell signal immediately afterwards. How does one avoid being whipsawed? Well, one of the beauties of, there's no way of not being whipsawed in any market. That's just, price of doing business, whether you're trading intraday or whether you're trading daily bars or monthly bars. It's just the way the market is. The beauty of our methods is that because we have to have a certain amount of requirements met, there are not a ton of them, maybe only 3 to 5, but with these requirements met, they can only be met in trending markets. So if there is a whipsaw market happening, oftentimes a signal will not be generated, and so you will be out of the market, and you can look at another market or a different time frame where there are signals being generated. So that's the beauty of what we teach. our methods oftentimes, not guaranteed, but oftentimes will keep you out of these whipsaw markets because we need a trend in order to establish some type of signal, okay? So that's one of the great things about this. Brad is asking, why are we not offering all of our strategies in this college? Well, Brad, because we feel that we're offering you the best of the best. These are the strategies that we feel offer you the biggest bang for your buck. And remember, if we offer each and everything, it's almost like we're overcomplicating things too much. There are many traders who come to our colleges that are first-time traders, and to throw 10 different strategies at them, that would be far too much. Plus, we would be having to increase, because of their consistency levels and how powerful they are, we would really have to have this, instead of maybe $44.95, it would have to be closer to $10,000. So we want to keep the price down so that you'll be able to take advantage of it. And plus, we want to give you the best of the best, okay? Once you become a member of the college, you feel confident and you've got these strategies under your belt. If you'd like to, you can purchase other ones and we'll give you discounts because you're a member of ours. But we want you to start off with a really nice foundation in the beginning, okay? Some people are saying, well, I already owned a certain strategy and the Pat D. Are there any concessions made? Yes, you can get some credits. That's what's done with Pro Trader Strategies. I handle all the teaching aspects of the company. Pro Trader Strategies, I'm sure, will honor anything you've purchased before and help, and they will be able to give you some type of deal if you've already purchased something, okay? So we're not going to try and alienate anyone and make you pay twice for the same thing. So just contact Pro Trader Strategies. They'd be happy to work with you. All right, we're here to help you. Remember, we're an educational company. We're not trying to just force feed you strategies and say good luck. We want you to be a consistent trader, okay? Remember, 2017 is starting in just another month or so. Look back and see when you first started trading at the beginning of 2016. Are you anywhere near you thought you were going to be? Most likely you're not, and it's not your fault. I was there myself. For 2 years I struggled. I didn't think I was going to be on the floor much longer because I was not able to generate any consistent profits. I would have maybe a couple of good trades or maybe a great month, and then I'd give it all back the next month. And I'm sure many of you know exactly what that feels like. It's very discouraging and frustrating. What you're looking for most of the time, or what we're chasing, is some fantastic system or strategy that's going to solve all our problems, and it's like winning the lottery. But that's a gambling approach. It wasn't until my mentor said to get rid of that gambling approach and strive for consistency that I was finally able to get on that road. Okay, so that's what we're trying to instill in everyone: consistency, an approach that says you're going to be here trading 20, 30, 40 years down the road instead of trying to go for that big score. Because that's, if you look at all the other websites, everyone's promising the big score and you make tons of money. And most of the time, it just doesn't work, okay? So take it from someone who's been there, and I will be with you every step of the way in the Emini College, all right? Now, contact Pro Trader Strategies. Take advantage of this deep, deep discount. We've discounted it almost 50%, and then we're taking an extra $500 off for all the attendees today. In addition to that, we're offering payment plans. So if you can't come up with that lump sum, don't worry. You can come up with a small deposit and you can still get instant access and have me instructing you. Remember, these are live classes. You'll be in the class with me. We keep them smaller and intimate, so take advantage before we close up the college, okay? If you want to get on the right track in 2017, I strongly urge you to take advantage of this. All right, as we conclude, I want to just say thank you so much for attending. I hope you got something out of this. Even with the 2 strategy rules I presented, I hope you got a little insight into how you will become a better, more consistent trader. And as you take one last look at our disclaimer, I want to thank you for joining us, and I really hope and look forward to you becoming students of mine in the new Emini College. Thank you so much. We'll see you next time. Bye-bye.